Right. You should be seeing the US dollar chart. So essentially, the sentiment continues to dictate the market, the sentiment around the Federal Reserve, and markets are pricing in a rate cut as soon as March next year. So the data is extremely key. That's what the market is going to be focused on. That's what the Fed is focused on, and we're starting to see signs of slowing. We got the Richmond Fed Manufacturing Index that showed activity was starting to slow, and also the Dallas Fed measure of services was in decline. So when you got that coupled with Federal Reserve speakers coming out with dovish comments such as Waller stating that he is increasingly confident that policy is well positioned to slow the economy and get inflation back to 2%. That was the green light for the market to continue shorting that dollar on a Tuesday, coming out of a Thanksgiving long weekend. And there was hardly no surprise in that. So we broke yesterday's lows in this US dollar index. And in fact, we even broke this level 102 spot 93.6, depending on your broker. But that structural point there has also been broken. So my best bet is that this dollar will continue to decline into this potential demand area. Now, whether we're going to see a pullback, it depends. Asia is going to dictate what goes on from here. We've got some key data coming out of Asia, so we're likely to see some activity today. We've got the RBNZ, and then the data comes with Aussie CPI. So we've got some key events that could be a driver, and also tomorrow, just concentrating on the US dollar, we'll have CPE and gross domestic product. So it's a busy day ahead, and therefore we could continue to see strong movements in the markets, and then that dollar is firmly in the hands of the bears until we start to see a deceleration. Because I can hear you asking, well, when's it going to correct? When's it going to correct? What we need to do is get out the habit of expecting all the time a correction. When these markets are breaking out, they can stay broken out for a period of time. Now, it is Wednesday, and Wednesdays and Fridays can be the foundation for these types of reversals if we're expecting that. I mean, with the US dollar here, we've seen a number of days breaking out of levels. So I would be in anticipation of a pullback, but it's pointless trying to call it. What you need to see is evidence on the chart that this market is decelerating. So at this point, this dollar tucked in below that level, which I showed you earlier, which is a breakout level. If we go back to the daily chart, with the dollar tucked in below that level, then my bias is to the downside. So perhaps we're going to have a bit of a pullback and then the continuation into a demand area. So obviously there's no guarantees. I don't have a crystal ball or anything. That's purely based on technical analysis and the market sentiment, which is driving the US dollar lower. So, okay, we've got people here saying still can't hear anything, and Zeb is saying you can't see the chart. Does anyone else have that difficulty? Is anyone else not able to see the chart? Or can someone tell me that you can see the chart, and that will confirm to me, Zeb, that you might need to leave the meeting and come back in? Usually that fixes it. Or if you're using a web browser, not seeing anything either. Okay, have you guys downloaded Discord as an app, or are you all using the web browser? Because I've been told that the app is more reliable. Yeah, you see, it's working for some. Faraz, do you use an app, the Discord app, or are you using a web browser? That would be interesting to know. In any case, those that can't see the chart, this is being recorded and it'll be posted very shortly after the end of the meeting into the Discord. Or alternatively, you can try leaving the room and coming back in. I'm going to reshare the chart and see if that helps. So hold on. Right. So I've just shown that again. So that's a second chance that you might be able to see it. Shah, can you see the chart? It worked. Okay, great. Fantastic. So just very quickly then, I was talking about a breakout level on this daily chart on the US dollar index. So we are below that level. While we're below that level, basically, I am bearish. And in anticipation, perhaps, of a firmer correction into the level, potentially even coming back up above. But while we are on the front side of this trend, that red line, that trend line, then I'm bearish. Below last week's lows, which is that dotted orange line, last week's lows, that breakout level, all of this is particularly bearish, and the demand area is not until down here. All right, so that puts 102 on the cards as vulnerable down to 101.70s. So what does that mean for the rest of the board? Well, I've put a little watch list together. I've got the euro, for instance, which is weighted heavily within that basket on the dollar index as a third day of breakouts. Well, this week, I mean, we've already got a build up from last week's low. So we've got 1, 2, 3, 4 days of breakouts, but I'm not in anticipation of a correction currently. The market is too bullish, and I'm in anticipation of a continuation. Now, if that doesn't pan out, then that's fine. And on a Wednesday, we can be looking for the opportunity to short into all of that length. So we'll just have to wait and see how things pan out. But we're currently above last week's highs. So we're breaking out, and this could be a breakout that's in its infancy. So early days yet to be in anticipation of the pullback. We've already had that correction into what could be a supporting area. And we may well get the continuation in Asia, London, and perhaps in the US, we'll have an opportunity to short. But at the moment, it's in breakout mode. So this is a range expansion of the opening balance of Monday that's in play. And I've marked that with this tool, and I've measured the range. And so far, we've done 150% of that range to the upside, and it could well continue to expand higher and higher. Okay, and then if you want to go through that list, you can take a snapshot and look at them yourselves, but I'm in anticipation, as it says, continuation trade on day 3, which is Wednesday, day 3 of the week, for sterling Swiss to the upside, euro yen to the downside. That was the trade today. Sterling yen to the downside in a continuation of the sell-off from the failed attempt at last week's highs. So the yen pairs, so bullish yen basically. That was the trade today in sterling Swiss from the closing price. So those that have been following me will know that I treat these levels as key. The closing price, last week's high, last week's low, yesterday's high, yesterday's low. All of these are key levels to be watching the behavior of price in your trading session. And for me, that's the US. For many of you that are here, it's for the US. And that's the sort of setup that we're looking for from the closing price. Bang. Okay, sterling dollar continuation trade along the trend line to the upside, and I've got 127.50-ish marked as a level on the daily chart that this could well be pumping towards. And we've gone through a euro dollar. Now, we've got data out for the Aussie, so I'd be inclined to wait for the data to come out than do anything with this. But this has come up into a supply area, and we are firmly above last week's highs. So I'd say that could be overdone. We've got 1, 2, 3 days worth of breakout traders in the market into a supply area. Data is on the cards for today, and that will determine the outcome of this setup. But it could well be an opportunity to be looking for a short below. I've got here 66.37, which was the foundation for that final high ball candle. So we've come down to test it. It's acting as support at the moment. If we break that level, then it could be the foundation for a long squeeze back to the closing price and even back into Monday's rally. Dollar Swiss, looking for the reversal to the upside. Aussie CAD to the downside. Gold to the downside. Silver to the downside. And so forth. So that's my watch list. And I think I've got oil today. It's going to end bullish by the looks of things. So after a series of down days, bulls are stepping in. They came in on Monday. They've continued. They broke Monday's high, and that could well be the catalyst for a continuation trade towards last week's highs. Okay, so there we have it. That's the watch list that I've created. Obviously, none of this is, it's yet to be seen, isn't it? So we will react to the structure of the market when we come into our trading session. But those are the biases, and just be nimble, be ready to flip the book if it's not setting up, and if we're being proven wrong otherwise, and it's reacting to a key level and counter to our outlook, then go with the flow. So be ready to change the narrative on that watch list. So are there any questions, guys, that we can go through? If not, we'll wrap it up, and I'll send this recording. I'll post it into the Discord group, and then you can rewatch it and compare it to your own analysis. And I hope it's been of some value. But let me know if you've got any questions. I'm happy to go through them. Okay, I've got a few here coming through. What is your view on the possible PCE outcome? So personally, I'm not much of a fundamentalist. I much prefer to look at the technicals. I let the data come out and see how the market reacts to the data. So we can only go by what's on the consensus, which is a collective of opinions that have been put together. And we've got the consensus out there. We know what the prior was. All the information there is on the calendar. And I'm not here to prejudge or, presume anything, because I don't trade ahead of the news. But essentially, if it's less inflationary than expected, or if it confirms the dovish narrative, then that is bound to be bearish for the US dollar and positive for stocks. Can we say the probability of a higher than expected can play as a fundamental for the pullback for Dixie tomorrow? No idea. Depends on the market will react to how it reacts. I mean, I can't prejudge. I mean, you'd expect with a stronger GDP coupled with a dovish sentiment in the market, that would be conflicting and possibly supportive for the US dollar. What we want to see is weaker data that is less inflationary, presumably, and that would enable the Federal Reserve to start trimming back its hiking regime. being asked about gold. So gold, I have it as a potential reversal trade for Wednesday. There's the closing price of Monday. The closing price of today looks as though it's going to be up high. And I'll be looking for a um, market that is failing to the upside, coming back in to the closing price and building bearish structure to fill in the imbalance of this strong rally. So there's plenty of imbalance here in the market. But as I said earlier, the market can stay out of balance for a long period of time. And what you don't want to be doing is trying to counter trend a strong trend. So you need to see the deceleration, which we're starting to get here, but there's nothing to say that this can't consolidate as it's doing and then continue up. So I'll be reacting to levels and the behavior of price during my window of trading, which is going to be between 8 a.m. New York and up until lunchtime New York. Anything before or after, I'm not interested in. But that is where I expect to see activity, especially given that we've got the data coming out of the US tomorrow. So that's what we've got on the cards. I mean, when you look at gold, it's right up into these highs. So it'd be fair to expect a pullback. We've had a couple of days of breakouts, so we can continue to see if we get the third day of breakouts on Wednesday and it starts to trap volume and breakout traders that are trying to keep long, then we've got all of that money to come back into. So that's my thesis on gold and silver. Okay. Sure. I mean, data at times can be leaked, but again, I'm not really interested in that. What I'm interested in is how does the market react after a data event? So when the news comes out, there'll be volatility, okay, and you can be whipsawed trying to trade that. What you want to do is let that volatility settle, see a market structure formed, and then you can take your trading decision if it aligns um, with your regime that you want to see. So my regime would be seeing price at a key level, which would be a closing price, a high or low of the prior day, a high or low of the current day or current session, especially if there's been, say, Asia and London building up. So you've got this bullish trend in place. You've got two sessions of rise. And in the US, it's extending that rise and then failing and then forming bearish structure. And that for me is the signal to go short from the high of the day, or if it comes in below the closing price, at the closing price, and so on. But trying to trade the news and second guess just based on what the data, the data comes out, you have no idea whether the institutions have already traded that news. They may have already invested in their expectation of what the news outcome is going to be. And that's why very, very often you can see a counterintuitive reaction to the data because the institutions are using the data to get out of their position. So, for instance, a positive GDP number, they may have already factored that in. And when the fact comes out and proves them right, that's when they're going to be selling. They're going to be selling into all the buy orders because that's liquidity for the big players to sell out of their position. And then you can see a complete reversal. So that's why I don't want to be trading on the data itself, and especially not before the data, trying to second guess what it might be. All right. So I hope that is understood. Any further questions? If not, we'll wrap it up and I'll wish you all a pleasant day, evening ahead. And we shall see you tomorrow. So I'll be here from about 7 a.m. and I'll be looking to see how the market is setting up in accordance to what we're expecting to see from that watch list. And if it's playing out in line with that watch list, then that'll be obviously a good thing. If not, then we'll have to flip the book and look at it from a different perspective. Okay, guys, thanks very much for being here and see you tomorrow.